About the FMCG space though, we have Harit Kapoor, the FMCG analyst at IDFC Securities, joining in from the sidelines of the IDFC conference. Harit, hi, thank you very much for joining in. Well, you do join in at an opportune time because there's a lot of data with regards to how the pay commission would possibly impact consumer stories and maybe consumer goods in terms of growth going forward. Have you done any analysis in terms of what the impact could be and which companies within the FMCG basket could benefit?
Yes, thank you for having me. I obviously have heard all the news on the pay commission, and my belief, and we believe at IDFC, that the pay commission numbers are a little higher than expectations. Obviously, it is going to benefit the entire consumer basket, but the higher benefit will be to discretionary categories. If you cut to 10 years ago where this sixth pay commission came through, the higher benefit came to consumer discretionary plays like autos, like jewelry stocks, like consumer companies, especially in the durable space. I believe there will also be a trickle down because of higher urban growth for staple companies, and the overall space will benefit. However, the timeline will be important of when this actually comes through. We believe at IDFC that this could take another 12 to 18 months to fructify, which means the full benefit of this will come through only towards the second half of FY17 or possibly in FY18.
Okay, Harit, hi, morning. So, what are your top ideas? Which are the stocks that you like?
Yeah, within the staple space, we like Godrej Consumer Products. We believe that the growth story in Godrej Consumer is more intact than other peer companies. If you look at their product portfolio, they're market leaders in 2/3 of their product portfolio in India, as well as a large part of their product portfolio internationally, and they have continued to gain share. Volume growth in the domestic business continues to be very strong and is expected to continue to be very strong going forward in the second half of the year as well as FY17. We believe the full benefits of EBITDA margins will come through in the second half of the year from a lower raw material environment, which will continue to benefit margins as well as profitability going forward. We believe that the recent stock correction is a good opportunity to relook at Godrej Consumer Products. From the rest of the portfolio in retail, we also like Titan. We believe that the pain as far as degrowth in the jewelry business is concerned is now behind us, and you will see continued strong growth in the jewelry space, which will drive overall growth for Titan. The festive season has been relatively encouraging, and with the Golden Harvest scheme back on track, that will provide further impetus to growth. As far as the other discretionary portfolios concerned, we also like United Spirits. We believe there is a huge turnaround story underway in United Spirits, and we are still not even 1/3 of the way as far as the improvements in profitability are concerned, as far as EBITDA per case is concerned for a company like USL. They have been working towards premiumizing the portfolio and growing the prestige end of the portfolio. We believe that, coupled by an environment of lower raw material prices, will lead to very, very strong earnings growth over the next 2 to 3 years. It will also be helped by the fact that the monetization of non-core assets